Hey everyone, this is Conrad Layn here. Just here hanging out in the patio near the fireplace. Just thinking about ideas and ways of how you could build your credit report in under 30 days and start building it fast. Let me dive right into it. The first step you want to do, and as a past HUD certified housing counselor, and I used to work for a bank institution, you really want to consider becoming an authorized user. What an authorized user essentially is, it just allows you to become a part of someone's credit profile and you inherit their credit history. So for example, if you have a mom, dad, friend, brother, sister, friend, whoever, you ask them, hey, can you add me to your credit card? When you get added to their credit card, you inherit their credit card history. Just make sure they have a good credit card history with that credit card provider, because if they have a bad credit card history, you're also going to inherit that. You don't want to do that. Make sure the person has a good payment history with that credit card so you can inherit it. And that's a quick way to do it right today if you need to, if you know someone, and it could be a friend, mom, dad, brother, doesn't matter. Just make sure you ask them, can I become an authorized user? And the cool thing about that, you don't get access to their card if they don't want you to, so they can keep the card. You still get the credit card history, so they don't have to worry about you spending or going into their accounts or anything like that. So a very safe way to do it. One thing to watch out for though, there are companies that are selling to become an authorized user on other people's accounts that you don't know. You want to be very careful with that. So if you don't know them, there has been a lot of fraud that's happened. I'm not saying to do it, not to do it. I'm not against it or for it. I don't personally recommend it. I think you should always go to someone that you personally know. That's the first thing. And as a HUD certified housing counselor, I'll put something called a tri-merge report, credit report. And what that essentially is, it pulls all three credit reports from Equifax, TransUnion, and EXPERIAN, and we wouldn't discriminate against if you had an authorized user account. So even if it wasn't your account, but you just inherited their account, we wouldn't discriminate against that. So it's a great tip that a lot of people aren't aware of. So be very careful about purchasing authorized user accounts. But if you know someone person, like a mom, dad, brother, sister, do that. That's the quickest way you can do it right today, right now. And I'm gonna actually follow up. You can also go to freeannualcreditreport.com. Due to Fair Credit Reporting Act, you actually have access to one free credit report every 12 months from Experian, Equifax, or TransUnion. Just see what's on your credit report, but I want to be very, very clear. It does not show your credit score. It only shows your credit history and the accounts that are there. Still very valuable. Follow the next video going into this. This is a quick tip for today, but I have another video that's going to go a little bit in further detail. Have a good day. Hey everyone, this is Conrad Layn here. I just wanted to dive right in, show you some proper ways on how to build your FICO score and your Vantage score, which is your credit score essentially. I was a HUD housing counselor. I worked for a banking institution to assist people with increasing and helping them learn the ways on increasing their FICO score and their Vantage score with the credit bureaus. First and foremost, on the first screen, as you see here, it shows My FICO. You can always go to myfico.com. I'm going to leave links below on how to build your credit and just different recommendations. This is just in my personal opinion. I'm not your personal advisor, but just from my experience and my personal opinion, I'm going to leave some links. You could do further research, but these are just what I recommend and what I think have worked for me and for clients and other people. So I just want to share this information. So let's dive right into it. So first and foremost, the FICO score is governed by a system where, as you see, it shows 30% amounts owed, 10% new credit, 15% length of credit history. Credit mix is 10%, and 35% is payment history. What that simply means is 30% is the FICO score is built on this system where they judge and base your score off of 10% of it is new credit. So when you get new credit, 15% is length of credit history, and also amounts owed essentially means the amount you owe per credit card is 30%, and 35% for payment history, which is so important. It just governs how successful you are at making your payments per month for credit loans, installment loans, just any type of financing that's reported. The banks will govern that and use this system of FICO score. So I'm just going to dive right in and show you a few more things. So first, we're going to simply start with your credit score right away. I have these screens that I've pulled up. The first card I recommend is Opensky, but do your own due diligence. As I mentioned, all this is just in my opinion, what I've seen work for people, and I just want to kind of give you guys a shortcut so you can build your credit fast and build it strong. Opensky, it's a secured credit card. What that means is that They essentially ask for minimum $200, and what they will do is they'll allow you to put the money into a CD at their banking institution, and what it does essentially is they'll grant you a $200 credit starting off. You could definitely add in more, but the minimum amount and minimum requirement is $200. Once you deposit the $200 there, they will give you an Opensky secure credit card. And what that does, it reports to the credit bureaus, which are EXPERIAN, Equifax, and TransUnion. So you can build your FICO score. You just need $200. And the cool thing about this, look at this as a savings, because it is actually invested into a CD, which is certificate of deposit, which banks give you to collateralize this, so that they hold the money, so they know if you start missing your payments, they feel comfortable. But this is just a good way to really start getting started, so you start building your credit. So Opensky, this is the website. I'm going to leave all links below. Let's go to the next one. The next one I highly recommend is actually Selflender. Selflender, it's actually a installment credit building loan. So what this does essentially is they require you to deposit $25 starting off per month, which is very reasonable. And as I mentioned again, it's just a savings. You get this money back at the end of 12 months. So it's $25 per month. You pay per month, and it builds your credit score essentially because it reports good payment history to the credit bureaus. Highly recommend this. And the cool thing about this Selflender, I've used this personally, and it worked wonders. It was phenomenal. But the cool thing about it is now they're called Self, but they have an additional plan now where not only do they give you an installment loan, they also give you the opportunity to actually get a secured credit card that reports as well. You just have to make 3 monthly payments at least, and at least have to save $100 of payments going forward. But you can start, and you can actually open a self-secured credit card, which will help you also build it as well, which is really cool. And like I said, all you need is $100 in savings and 3 months of paying your Selflender installment account, which is a self loan. So they give you the self loan that help you build your credit. Then you can also open a self-secured credit card. Pretty cool stuff. So that's the next one I highly recommend. Now, the next one I recommend is Armed Forces Bank. This is a bank that really believes in helping you. And what they do, they require $300, and the $300 that you pay, as I mentioned, it goes into a CD, a savings account, pretty much. And like, so you can always get the money back. So this isn't something you're actually spending. This is money you're investing in yourself to build credit, so you get the opportunity to prove that you can pay and create good payment history. Because as I mentioned, 35% of the payment history is what really determines if you're a good if you have good credit or not. It's very, very important. So there's just some of the screen. Just want to show you guys so you guys can see it. This is all of it. And you can, minimum requirement is $300 here. And as I mentioned, you can always get it back. And I'm going to leave all links below. Just want to give you guys some homework, some things you can do so you can quickly start building credit right away. Now, the next one is called Credit Strong. Highly, highly recommend. Do some due diligence. Just in my opinion, I think this is a great benefit and a great product. And what they essentially do, they give you the opportunity to invest as low as $15 per month, and they will grant you a $1,000 installment loan. What's so important about these loans is that you basically, for $15 per month, they will give you, and they will report that you have a $1,000 installment account. So that's $1,000. And what this does is, it allows you to get more granted, and it proves to the bank and allows them to start trusting you with larger amounts. So say you want to one day get a $1,000 loan, they'll see here that you've had a $1,000 loan. Yes, it's secured, but they understand the banking system, and you're being responsible. You're paying per month, and they will be more likely and more inclined to actually grant you that $1,000 loan. So I'm just running through this very quickly. If you guys need me to go more in depth, I'd be more than happy to make a longer video, but I just want to do this as quick as possible for you guys. So on to the next one. Now, this is a great product. It's actually called My Jewlers. It's been talked about quite a bit. Don't mean to sound cliche, don't mind to see overused or redundant, but this is a great product in regards to what it does. They grant you $5,000 of unsecured revolving credit that they report to the credit bureaus. What this does essentially is it raises your credit limit on your credit reports. So when you're actually starting off, you want to build trust with banking institutions and prove that you could make your payments. So once they start seeing, hey, this person has 5,000 credit line, oh, another 5,000 or another 1,000, then at this point, it starts building a resume of, hey, you know what? Maybe we can trust this person. They've had a good credit history. Let's give them a chance. It just increases your chance significantly. You want to just be able to have the ticket to the party, man. This is the way you get it. So it's very quick. And what this website does, it allows you to purchase a product. You buy the product, so it's like jewelry, whatever the case is, and then you pay it back. So it could be something for as simple as $100. You buy $100 watch or whatever. The point is, it's an investment that you're purchasing so that you can actually start participating in the party. You have the admission to the party now. You have a ticket, you can get in, and now you can actually start proving that you can make payments, and it's reporting a $5,000 credit. Very important, so that later down the line, you're building your resume so that you can actually start inquiring about getting bigger loans and larger loans. On to next. There's another product called New Coast, fairly simpler. New Coast Direct, what they simply do is same thing. You order a product, say you spend $100 and you pay it off. Those payments get reported to the credit bureaus, and you basically are building a resume showing that the banks that you actually can prove that you can handle a payment. That's pretty much what you're doing essentially. So that's pretty much a run through. What I also highly recommend as well, to start monitoring your credit, there are two credit score models and algorithms. One's called VantageScore 3.0, one's called Fico score. Fico score is what's more widely used with the banking institutions. VantageScore has been used before, but more than likely, usually Fico score. They usually use the three credit bureaus on the Fico score model algorithms. But what I've noticed is, like I said, I've worked for a banking institution in affiliation with them. They usually really believe in utilizing the EXPERIAN model. They do use TransUnion. They do use the Equifax, but most times that I've seen, they've used EXPERIAN. And so the Credit Karma is great. It doesn't show you what EXPERIAN Vantage scores, but they do show you Equifax and TransUnion. But it's absolutely free. Sign up. Still a great way to check your credit utilization. What credit utilization is essentially is the amount of credit you have. So for example, if you have $100, you spend $10 per month. That's 10% because you took the $10 out of that. You always want to try to stay under 30%. That's what's usually widely recommended. But to be quite honest, I have seen that 30% is still too high in my personal opinion. I think you should stay at around 10% and under. I personally stay around 1% to 0%. And what you want to do, I highly recommend, is look at these as tools. Don't look at these as spending, like you want to go on a shopping spree. Look at it as, hey, I got a $200 secure card, for example, with Opensky. You only use maybe 10%, $20 1 month. You pay it off that month. The reason you do that, however, it still shows payment history. Yes, it'll be at zero, but you've already used it. They report good payment history that way. Please do that. If you don't do it, that's totally fine. But this is my personal recommendation and what I've seen work, and this is just in my opinion. Anything under typically 10%, it really allows you to boost your score a lot faster. I've seen that where it boosts people's score a lot faster if they stay under 10%. I keep hearing 30%. That's way too high because it builds it very slow. You want exponential growth. You want to grow fast. So what you want to do is you pay that card off every month. Keep it under 10%. So that's what you want to do. Every card, always remember, keep it under 10%, please. If you want to build fast and you want to build exponentially, keep it under 10%. Every card you have, that's a credit card or a secure credit card. And all a secure credit card is, like I mentioned before, all it is just a card that you deposit and you invest into a savings account. They give you credit. It's a real credit card, but it's governed and protected, collateralized by your savings, say $200. And you just keep and you treat it like a real credit card because it is a real credit card. It's secured. Then guess what? Then once you start paying, making good payments, keeping your credit utilization low, proving that you can pay your credit card off every month in full, then at that point you can start inquiring about unsecured credit cards where they don't require any type of collateral. So that's phenomenal. That's how you start building. You gotta start building. You can start this as early as possible. So I highly recommend that. Another great one. It's called NerdWallet. NerdWallet is great. It's phenomenal. Same thing, doesn't show Experian, but it will allow you to see how with your credit utilization. It'll show you your accounts. It'll show you hard inquiries. It'll show you, and hard inquiries are pretty much for example, when you look for a mortgage loan or a car financing loan, etc., and you're able to, regardless if you get the car loan or the home loan or not, you get a hard inquiry. Or when you go for a credit card application, you fill it out and you want to inquire about getting a credit card, you get a hard inquiry, pretty much. So it pretty much stays on your credit report for up to 2 years. They do fall off. They don't really, it doesn't really affect you as much after 2 to 3 months, I've noticed. So don't worry about that. That's part of the process. Just be careful though. But you always get a hard inquiry when you typically look for a credit card, or you apply for a credit card, or apply for a car loan. So just be careful, but you at least can monitor that. One that I really love and I recommend, absolutely free as well, is Discover free credit score. This is so phenomenal because they actually allow you to see the FICO score of Experian actually for absolutely free. So it's not a VATCHA score. You actually really get to see a real Experian score. It lets you see it every 30 days. It shows you how it fluctuates up and down, or if it's statutory, if it stays the same. Just log into this, sign up for it. It's absolutely free, and you can check your FICO score absolutely free every 30 days, like it says right there. Discover. So it's awesome. As I mentioned before, Capital One credit card. This is a partial secured card. So what this essentially does is they require you to invest $49 into a savings CD, certificate of deposit, so they could extend an additional $200. So for example, if you deposit $49 and invest that into yourself, they'll grant you $200. So this is a partial secured. So it's half unsecured. Well, not half. It's unsecured and partially secured. Pretty cool. Great way to prove yourself to the bank. And what's most important is this. Typically, most banks or credit unions offer the secure credit card feature. Essentially, is allow you to deposit into their CDs and they hold and collateralize the money. But this is the cool thing. Once you do that, you're building banking relationships. This isn't talked about enough. Banking relationships are very important. What that means essentially is this. Once you are building payments and you're paying your card off every month, even though it's secured, it gives you opportunities. If you want better interest rates, if you need to get a car loan, if you need to get another credit card there, it's pretty great. So you want to make sure not only to pay your payments monthly and pay them in full if possible, or at least pay the minimum amount. But if you can pay it off in full, please do that. And how you do that, just spend barely anything. You spend, if you have a $200 card, spend $2 at Ralph's or a grocery store or whatever. Buy a piece of gum and just pay it off. Keep it small so you can easily pay it back. Don't put yourself in a situation where it's hard to repay these cards off, where you're going over the utilization rate. Keep it very low. Buy a stick of gum. Buy something that's insignificant and doesn't even cost anything, and just pay it off. You want to do that at least every 3 to 4 months because you don't want the cards to close on you. So still do it. Don't just leave it. Don't just leave it at 0% where you don't ever spend. Keep spending, however, but keep it under that threshold. I highly recommend 10%. There's a lot of people online that say 30%. From my experience, I've seen you don't get the exponential growth. If you keep under 10%, you get the exponential growth of growing your credit score very fast. And it actually impresses the credit bureaus and also the credit banking institutions. And you can actually say, hey, look, my utilization is just something you can bring to their attention. So when you call, a lot of times, if they do say not approve you for a loan or a car loan, this is where you call and you say, hey, look, Mr. Banker, if you have the opportunity to call them, it's happened to me where I've called people at the bank. They didn't approve my loan, for example. I call and say, hey, my utilization is 1%. I have perfect payment history. And they say, you know what? We'll approve you. Sometimes you actually get the opportunity to have a manual approval, but you have to build that credit resume so that you can actually prove it. Hey, look, my credit utilization is 1%, but if you're at 55% or 50% or 30%, it's not too special. If you keep it under 10% or 10%, it actually proves to them more like, hey, you know what? This person will pay me back. They will pay the bank back, and they are responsible. That's what it's about. So please build your banking profile. You'll be able to build your banking relationship so you can get more products, better interest rates. Plus, you can also have more of a chance of, it doesn't guarantee, but more of a chance of a manual approval from a banker. You could call the bank and they can manually approve it a lot of times if you have a track record showing that you're under that 10% threshold and showing you perfect payment history or good payment history. Very, very important. So that's pretty much what I just wanted to share with you guys. Is here to help. This is just from my experience. I want to do my best to help you guys. Currently now. Bye.